What's up, Wolverines? My name's Andrew Candela.
And I'm Otto Espino.
Welcome to The Exchange,
where we'll be discussing national and global markets, our future outlook for the week, and our personal stock picks. All right, so yet again, bloody waters. Dow is down 0.94%, S&P down 1.3%, NASDAQ down 2.14%, devastating hit.
Yeah, I don't know what's going on in the market.
Yeah, seriously. Russell 2000 down 1.08%, and the VIX up 8.42%. Not to mention, global markets also in the red. London down 0.23%, and Hong Kong down 2.19%.
Yeah, not looking good.
So let's get into some of our headlines. All right.
Yeah. So September jobs report will be announced this Friday. And also, I think one thing that's worthy to talk about is the debt ceiling issue.
For sure.
So unfortunately, the U.S. Department of Treasury Secretary Janet Yellen has said that the federal government will run out of money on October 18th if the debt ceiling is not raised. If the debt ceiling is not raised in the upcoming weeks, the U.S. will default on its debt for the first time in its history, and that will be catastrophic. An analyst by the name of Mark Zandi estimates that defaulting on the national debt would wipe out as many as 6 million jobs and erase close to 15 trillion in household wealth, I think, and I saw that. So this issue has essentially turned into a political issue where Democrats are trying to increase the debt ceiling and Republicans are against that, claiming that they're raising the national debt.
Of course.
But in reality, the national debt has risen regardless who's in control. So, yeah.
This is a problem for all of us. And also, tell me about the chip shortage.
Yeah, so the chip shortage has been going on for a long time now, but it's, again, still something worthy to talk about as it affects the economy greatly. So this started in the beginning of the pandemic where automakers, suppliers, and car dealerships had to close down, just like every business had to close down and everybody went on Zoom. The dealerships had to close down. Some of those automakers had already experienced previous recessions and quickly canceled orders for parts, thinking auto sales would nosedive, which they did.
Yeah.
But they quickly rebounded as demand has gone up and 0% financing offers. So when the factories restarted, the stronger than expected demand for new vehicles outpaced production and has yet to catch up. Automakers put back their orders for chips, but by then, the chip capacity was taken up by other businesses.
Yep, and those chips are expensive.
Yeah.
So, earnings. Pretty eventful this week. We have Levi Strauss announcing after market close on October 6th, Constellation Brands before market opened on October 6th, Conagra Brands and Tilray before market opened on October 7th. So a main thing to look out for these earnings is commentary about inflation, labor shortages, and also supply chain issues.
Yep.
Because that's affecting all businesses. We talked about Bed Bath & Beyond last week. Their earnings, not too pretty. They had a devastating drop in sales because of supply chain issues.
Because of supply
so
chain.
You got to be careful with this and look out for the companies that might be strongly affected by it in the coming weeks.
Yeah.
Hey, you hear that noise?
I think it's time for our personal stock picks.
So, tell me about SQQQ.
Yeah, so SQQQ, I'm not crazy about this because it is risky, but it's a stock for people that love to gamble their money, which I kind of like. I like risky stocks, but SQQQ is an inverse ETF. So basically, when the NASDAQ goes down, my puppy goes up. So an ETF, is an exchange-traded fund, which is a type of security that tracks an index sector, whether it be commodities, stocks, or another asset, which can be traded on the stock exchange. Just it can be traded as a regular stock.
Oh yeah, that's super convenient. All right, so my pick is going to be HEAR, HEAR, also known as Turtle Beach Company. So this is a very strong company financially. It's currently trading at $27.37. It took about a 5% dip today, which in my eyes is a buy opportunity. Its EPS is 2.58, and its EPS growth rate is greater than 83% of its peers. Not to mention, its PE ratio is 11.25, which is lower than 72% of its peers. So the lower, the better.
Right.
And also, average analyst price targets for their 12-month estimate is around $39. That's almost a 40% increase. So big gains, and it recently hit support. So, in my eyes, yeah,
explain what is support. When a stock hits
Okay.
support, what does that mean?
So basically, it's basically a price level that's been tested
Right.
multiple
Yeah.
times, and it's like a common level where the stock price tends to rebound. So it's sort of like a low point, and it's really common. So people kind of notice that pattern, and that's where they kind of like dollar cost average into their stocks. And
So once it hits that, it usually goes up.
yeah, it's normally an indicator of a buy signal.
Right.
So I'm personally going to be going with that.
Right. So that's all, folks.
All right. In the wise words of Warren Buffett, the first rule of trading is to never lose money, and the second rule is to never forget rule number 1.
That's right, Otto. Thank you for watching The Exchange, and stay tuned for the next episode.